Welcome, everyone, to another episode of Beyond the Hood with Tractor Zoom. I'm your host, Andy Campbell, and we're doing a special Trends in 10 edition for May of 2025. Today's recording date is May 20th, which is going to be important because what we talk about now might change in 3-4 days. But we're going to try to talk about everything from the plows to the policy to the eventual farm profits. And regardless of what happens, because there's a lot of uncertainty out there, we are hopefully going to just enlighten you on what's going on in the ag economy and how we see that relating into differences in farm equipment supply and values. So I have 10 minutes and counting now, and let's get going. The first topic that we really want to hit on is actually with more of the financial side. The Kansas City Fed has put out a lot of great reports, and one just in the last couple of days that I want to update you on. One that they put out in late April, I believe it was, talks about non-real estate farm loan volume. And the biggest takeaway that I saw here was the operating expenses for farms. Obviously, you need it to put in the crop, but in the last few years, we haven't needed it nearly as much. And so the year-over-year change honestly, it was negative all the way from mid-22 all the way to 2024. Well, that changed in January of 2024 to where we have now had almost 6 consecutive quarters where the operating expenses have been higher than the year prior. And to add on to that, though, maybe the most concerning piece here on the financial side is that the number of loans greater than $500,000 as a share of all loans has now grown to about 3.5%. We haven't seen that type of numbers in that magnitude ever. This graph goes all the way back to 2010. And so we are now solidly in 3 years and growing in the number of just large $500,000 loans that are out there. And I think farm equipment is partially, at least, to blame on that. So is land value. And here I want to take this back a little bit on the history side. The same KC Fed came out with a USDA data-led publication on the net farm income graphed with the non-irrigated farmland trend value. And we all know what net farm income has done and what it's projected to potentially do here in 2025. We'll even hit on that a little bit later. But going back in the history lesson, in the 1980s farm crisis, I was not this size. And I remember my dad talking to me about it took 3 years for farmland values to really go under a correction, but it only took about half that amount of time for the farm equipment to correct itself. And so, again, a lot of differences between then and now, but one of the similarities is we are being pressured by interest rates. Not to the extent that they were then, but they're certainly having a bigger effect now in 25 than what they did back in 2013, 14, and 15. So that cost of capital is making a bigger difference. And for the first time in almost 7-8 years, we are seeing farmland values drop year over year. Not so with cash rent values, but it has been essentially 3 years now after the heyday, and we are seeing a slight correction on those farmland values. But we've already seen that probably almost 18 months ago. So it looks like the time history is repeating itself, or at least rhyming with those early 80s in terms of farm equipment is more responsive than the farmland values. Okay, one last graph that's put out by the KC Fed, and this is in their most recent publication put out here mid-May, was the collateral requirements and renewal extensions. So for the collateral requirements needed, that has now grown almost to the level in 2025 that was required back in pre-COVID eras. So if you follow the graph here of the collateral requirements from lenders, it was a little staggered, but pretty much from 2017 all the way to 2020, they had their index value of about 125. Well, farming times got better. Farmers had a better debt to asset ratio, better financials. Well, now the value is about back up to that 125 that we saw back in those late teen eras with farming. So again, it just reinforces the fact that we talk about entering into a new normal. Well, there's certainly a lot of things going for the farm economy, and it is cyclical. So it's important for us to remember that we've been here before, but we are certainly back there at this new normal again. A couple other things that are notable within the farm equipment and farm industry right now. is the 45Z biofuel blending tax credit extension. It hasn't been signed into law, but it did go through the House Ways and Means Committee that modified the 45Z tax credit for biofuels. It's just an important signal that this, in some shape or form, will likely continue going forward. So that's a positive. On the corn demand side, probably a negative, not to get anything too political, but the Iowa Senate did restrict the use of eminent domain for carbon pipelines. That's important for everybody outside of just Iowa because that was really required to take a lot of the ethanol, the carbon dioxide from the ethanol, pipe it up to the Dakotas, and essentially make corn and ethanol viable for SAF use. And that looks to be stalled depending on what the governor of Iowa does in terms of a veto or no veto. Okay, a couple other things. In a near-term U.S. farm economic outlook, corn market, if you've seen that, it's stagnant and meh at best. But really, there's reasons behind that. We have reported to have planted 95.3 million acres here in the United States, and with a trendline yield of 181 bushels, which would be a record. This is having the potential to put out a record corn crop. Obviously, record corn crop brings in better profitability, but with a record corn crop, it brings in a real likely big hit to the corn market, reducing profitability. And so it could go one of either ways. If we have a great growing season across the United States, which planting progress, for the most part, has been good, we are set up to succeed, have a huge crop, but we are also susceptible to a drought in many different areas. And so if that were to happen, the corn market would probably rally significantly, and we might see some great values in certain areas, great profitability in certain areas, and great equipment demand in some certain areas. But time will tell. And again, with corn, you're really looking at the month of July. We'll be watching the weather forecast there to see if rain truly makes grain in that sense. A couple other things that Purdue did put out their farmer sentiment, and maybe even counterintuitively, that the farmer sentiment for farm capital investment did increase in the month of April. This is taken after the tariff announcement, so at least it appears that it was largely positive. But I will say that when you graph that farm capital investment index right over our Tractor Zoom row crop data, tractor auction values, you see this broken out into a period of three different stories. Really, you've got from 2016 when they started this investment index all the way to almost to 2020. You've just got a stagnant farm economy, stable supply, and because the farm economy is stagnant, you just see those row crop values dropping year over year, month over month. Not significantly, but it was just putting downward pressure on those overall values. Then you have 2020, the whole host of issues that hit with the pandemic and the Russian invasion of Ukraine. That really sent the commodity markets into a tailspin. Equipment prices shot up. It was a great time to buy equipment because everybody had so much cash, which then, with the supply chain hitting right after that, too much cash chasing too few of goods, equipment, creates inflation. And then the investment index plummeted because the rising values. And you can see that in this next period, the value of used equipment just shot up while the investment index dropped from Purdue. Really kind of bottomed out, and they've been sitting around in their index form somewhere in the 30s or low 40s for a number of years. Well, that has climbed back up largely here in 2025. And at the same time, supply is now returned. And this is the third period I was talking about. When you have ample supply, low profitability, the reverse happens. And you're getting a bit of a deflation, at least on those used equipment values, and a correction. Now that farm capital investment index from Purdue is hovering around that 60, where it was back in 2016 to almost early 2020, those auction values have returned to about those 2016 to 2020 timeframe. And so I think the important takeaway here, similar to what we saw with the financial indices that I was showing you earlier, is that we've appeared to come close to what is a new normal, a new expectation within this used equipment market. Not that we're not going to continue to see fluctuations, which I'll talk about, especially in row crop tractors and four-wheel drive market. But I think that having the time or the frame of mind that we are in a new normal, but we have been here before in a similar situation, is encouraging, especially when you think about investments for your dealership. and helping farmers prepare for the future. Okay, overall supply, demand, and sales. We know that the value of new equipment does continue to ratchet up, and this is going to continue to cause a little bit of strain on some farmers, because 4% of $500,000 is a whole lot more than 4% on $200,000. And so that, along with potential supply chain disruptions that we are likely going to see later this summer, could drive more users to focus on that used equipment, which again will likely tighten up the supply because of the higher demand and raise equipment values later in the year or in 2026. But there's a massive caveat again with the commodity markets that we talked about and the overall just demand, tariffs, so much of that stuff that not only could change in the next 6 months, but it could change in the next 6 days. Okay, overall, I want to hit on a few high value equipment categories because how am I doing on time? I'm over 10 minutes, but bear with me here and I'll be brief. Let's at least talk about the highest value of equipment out there. 400 plus horsepower tractor supply. We're seeing a supply increase on that 38% year over year. We are seeing that plateau a little bit since the fall time period, but there's some headwinds. I think we're going to see some trade-ins this summer that'll continue to push that supply up seasonally, and without any big shift in the corn market, that I don't know if we are going to get a stronger demand. So I'd expect this market to be under continued pressure at least throughout the end of the summer. We've already seen an 11% drop year over year on these high horsepower tractors at auction, and so either a stabilization or a likely continued drop in value. A little bit of this does depend on the volume of dealership auctions that we see this summer. If we see the auction volume in 25 that we saw in the summer of 24, then that's going to suppress those auction values even further. But a good caveat to this, we have not seen on our TractorZoom auction success team the amount of dealership auctions coming through and being planned for. So there probably will be some. There certainly will be some, just probably less than what we saw in the summer of 2024. And a couple other points to hit on. You know, we talked about the heavy horsepower tractors. Let's give a little bit of a brighter take and talk combines, at least Class 8 combines, because it is a different story. All of last year, we were talking about the high supply and trying to get that under control. Well, kudos to you guys. You have done it. At least from April of 24 to pre-plant to April of 25, we only saw a 3% increase on the overall amount of Class 8 combines that are out in the used equipment market. So that part of the variable has stabilized. Obviously, the demand is a little bit lower right now. So while values that we've seen this spring might have been a little bit lower than what the values were in the spring of 24, they are currently above the values that we saw going in the June, July, August time period. But again, there's a heavy amount of dealer reduction inventories, a lot of volume of those, especially those S780s that hit the market then. And so if that tide can be stemmed, I think that we're probably going to see a higher average value on Class 8 combines for the remainder of 2025 than we did see on 24, even despite the challenging corn market. But like we mentioned, there are so many variables out there yet. So stay tuned to those. Stay tuned to TractorZoom.com, our Trends in 10. Plus, we'll be putting out a fair amount of content each month, both trends, also on dealer efficiency and sales enablement platforms. So TractorZoomPro.com. You can follow us on all the social channels, and I appreciate you for sticking with me for a few extra minutes on this episode of Beyond the Hood with TractorZoom, Trends in 10. Take care, everybody. See you later.